The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the terrific Thursday, the May 1st edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it up to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tigers den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a sea of green out there, and that is all the U.S. indices that we track trading the upside. Dow is up 362 points, a little less than 1%, 1.5% for the S&P or 81 points, 2% for the NASDAQ, 410, 1 3/10 for the Russell, 25, 0.5% for the trannies, 74, 1 7/10 for the semi, 73 points there, and a 2.5% move for the NASDAQ composite, up 437 points. The spot VIX is still below its 50-day exponential moving average. That gives buyers an edge out there. Gold is down $91, trade out at 32.28. It's testing a key area of support. Silver has held its level of support. It's trading out at 32.33. It's down 20 cents. Light crude up 28 cents, printed out at 58.49. Natural gas up 10 pennies, printed at 3.42. And the 30-year Treasury back a half a point, printed out at 116.04. Our leaders in the clubhouse, dollar-wise to the upside. IDEX Laboratories, well, get that. I don't know about that. Mike, IDEX Laboratories, $38 move, 8%. Microsoft, $37, nearly 10%. Quanta Services, $34, 11%. Meta, $33, 6%. Comfort Systems up $28, 7% move there. To the downside, Eli Lilly off $76 right now, pulling back towards an area where it should be support. If it's only a counter trend move to the downside, that would be at 814.51. So you watch that area. Becton Dickinson is off $25, 12%. KLA Corp, $20, 2.7%. Everest Group, $16.5, 4.6%. Broad Ridge Financial Solutions off $13.50. That's a 5.5% move to the downside. So we got movers and we've got shakers. Let's begin our day by taking a look at the New York Stock Exchange Advanced Client Oscillator. We still are in the extreme overbought condition. We are above that plus 150 level. You can see prices moving higher. We may have a slight divergence pattern with regard to that advanced client oscillator, not at a new high just yet, but maybe it will. Maybe we won't have that. And what this is telling us, though, is at some point in time, this overbought condition is going to be worked off out there. The question is just how. If we take a look at the spot VIX index, it says, I don't want to work itself off right now. I want to get down to that lower Bollinger Band reading. That's at 1789. I don't know if that's really going to be an outcome. We'll take a look at that momentarily. You can see the ES Mini here trading into its sell zone between 55.85 and 57.73. If we take a look at the U.S. dollar index, it is trading higher this morning. It is running right up in the top of its profile resistance level. And that's at the 100 0.15 level. If we close above that, you'll have a profile change in trend, and that'll suggest that the U.S. dollar index continues to move higher. If that unfolds, well, then we'll probably take a look at Goldilocks, which in all major currencies is trading lower today. Remember, gold has a high in every major currency that we're looking at here. Major currencies being euro, yen, pounds, Great British pound, Canadian loonie, Swedish krona, Swiss franc, Chinese yuan, and the Australian dollar out there. But it's also trading, that also made that new all-time high in all of the Middle Eastern currencies that you and I track. And we're trading lower in all of those as well. Be careful. As I said yesterday, you can easily see a several $100 move, at least a several hundred dollar move to the downside. Why? Well, first of all, the reason why is this here. Nope, that's not it. Darn it. The reason why, where did Stevie put that chart? Gosh darn it. I thought I had everything set up. I did, and then I didn't. It's this chart right here. Why? Because there is a ginormous premium. This is not about inflation. This is about the geopolitical tensions. This is most certainly about what's going on, or what has gone on over in Israel out there. If you just take a look at how gold is traded, whether it's a Russia-Ukraine or whether it's just simply that Hamas attack at that Israeli festival back on October 7th, 2022, I believe it was. Yeah, 2023 out there. So there is just simply, and this, it's been a rocket ship to the upside for sure. So my suggestion, I can't tell you what the geopolitical events are likely to do. Instead, what we have to do is just pay attention to the charts. And paying attention to the chart says, be careful when gold makes a all-time high in all major currencies at the same time, and then begins trading lower. It is a ginormous caution sign out there. We take and I think we looked at it yesterday, and that is that gold is traded higher for now 4 consecutive months. So a 2-month pullback is a very possible outcome. If we take a look at gold on that weekly time frame, we can see the price ran right up into that upper rising trend line resistance. We're now back below a horizontal trading range at 33.29. Odds favor price going to make a move down to the 30.95, a bit lower than that perhaps as well, to get to that next rising price trading range level out there. Nothing else that I can see that makes sense to really review on this set of charts. Let's go over to Stevie's white background charts. And let's begin by taking a look at the equity future contracts. And what we have here is kind of a unique instance. We have, first of all, as I mentioned to you earlier, we've got A to B equals CD patterns in both the ES Mini and the NQ. By the way, for each of their instruments, whether they're the equal weight, or whether it's the weighted version like the SPY ETFs or even the S&P 500, they all have A to B equals CD patterns to the upside. They've all done it. They're all doing it with lighter volume out there. So that Tom coined that as a potential tiger Gartley. And that may be what is unfolding here. If we take a look at the ES Mini, it's got that A to B equals CD price projection somewhere around the 58.30-ish level. Inside the NQ, it's somewhere around the 26.50-ish level out there. You can see we are in bar number 7 for each of these. The ES Mini has been amazingly strong, stronger than the NQ out there, and that this is going to be day number 8 to the upside, consecutively speaking out there. Strong. So price also in bar number 7 for each of those. That says there's a possibility if tomorrow is a higher high, doesn't have to be tomorrow, Monday, Tuesday is a higher high out there. You could get a TD9 count topping pattern in addition to the A to B equals CD pattern that is out there. We look at the Dow. Now, those could form, the ES Mini as an example. So these could form Gartley sell patterns. And that's really the caution that is out here. Because if this does go on to sell a Gartley sell pattern, well, still we got to take things one step at a time out there. But H.M. Gartley is famous for saying on page 222, you want to sell the first A to B equals CD to the upside pattern in a bear market. I don't know if we're in a bear market, but we want to be paying attention to that Gartley sell pattern. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking the NQ out here and look at its intraday charts right now. The only topping pattern, really, per se. Well, there was a Rhodes momentum indicator sell signal on the 4-hour time frame chart, a TD9 count on the 2-hour time frame chart. A close above 20.035.25 at 12 noon is going to negate that 2-hour TD9 count top. It'll also negate the Rhodes momentum indicator top on the 4-hour time frame chart. Now, this candle doesn't close until 2 p.m. But basically, the message right now of the NQs is it wants higher price. Period. Don't try to short this. That's not the signals coming from any of the intraday time periods. Now, do as you wish out there, but be careful. Yes, it is May 1st out there, and that sell in May cycle is what everybody kind of hears. Let's take a look at it and really understand what that really means or what typically happens out there, and that is the following. So here's the S&P 500. This is 97-year history, so pretty decent number of years out there to identify the so-called sell in May cycle. Now, what we can see out here is the sell in May cycle does not take place on May 1st out there. It typically takes place on average right around May the 7th, and it typically provides us with a move down into the end of May. So we get about a 3 to 4 week normal knee-jerk reaction type move, and then the market actually typically moves higher into the July time frame. And then it's really in that July timeframe where then we start to see a top that moves down into October. Now, this is just the traditional seasonal cycle. We may not be in the traditional seasonal cycle. We may be in the post-election cycle out there. And the post-election cycle out there, if you sell in May, you're going to get killed and slaughtered. So be very careful out there. The sell in May, the post-election cycle has a bottom that typically forms right around April the 7th. Guess when the bottom came in for all of the U.S. indices out there? April the 7th. this pattern is in play out here. Now, we typically get a topping off right around May 6th, May 7th, so early next week, where we see price kind of trade sideways to higher out there before it takes off, and it doesn't typically top until the August timeframe. So just be careful out there. Understand the sell in May cycle out there and the two different patterns or analogs that we possibly could be in. I don't know which one we're in. However, the presidential cycle bottoming exactly on that April 7th date out there, that says that's a real possibility. And if that is, then the whole Gartley sell pattern that I take a look at, well, really what the Gartley sell pattern would do in this instance here would tell us about the short-term move. It says that's the S&P 500. Then we get up here towards early next week. Ooh, geez, sorry about that, folks. And then we back off just for a little bit out there before we resume that move higher. So that's the sell in May cycle out there. Let's get to a number of the requests that have come in. Steve is going to get too far behind, and I'd like to be able to get through everything. So let's start with the first one. Coming in from Tom G. wants to take a look at his favorite stock. That's NVIDIA. It's his favorite stock if he's long today because NVIDIA is now trading above the top of its daily profile, 112.87. A close today above the high from April the 9th out there. And April 9th, that high was 115.10. If we close above that, you're going to trigger an A to B equals CD pattern on the upside. It's not going to have the volume, not anywhere near the volume. That's 612 million shares that traded on that April 9th day. Today, so far, in 2 hours of trading, we're at 97 million shares. So you got about a 300 million share day. Doesn't matter. If you close above that, you're going to trigger an A to B equals CD. Now, the next price level objective, even though it has an A to B equals CD to the upside, or could form that today to the upside, you're going to run into resistance at 118.84. It would be closing above that TD9 count breakdown level that would then say, okay, you really have that A to B equals CD pattern to the upside. Another area of resistance, Tom, for NVIDIA is going to be 118.75-ish. That's its weekly oscillator and change line. And that's likely where price is gunning. So it's gunning for the 118.74, 118.84 level out there. And the monthly chart says, no, I'm back inside the profile. And I may want to make a move up to 128.15. If you're asking me, do I see a sell? Well, the only sell that I would see then would be price getting up to this high on April 9th. Again, 115.10. Our high today so far, 114.94, is moving above it, finding resistance, closing below it on lighter volume. Maybe you can't bust them the upside, but you got this daily profile that you got to deal with here. And as long as price remains above 112.84, it really may want to head higher. So that's what's going on with regard to NVIDIA. Let's look at your second favorite stock, and that is Tesla. It's many other people's favorite stock as well. GM, that wasn't where Stevie was going. Maybe he was going to this tab here, which should have Tesla. We take a look at Tesla. Stevie's got that same message. Don't short Tesla. At least not just yet. If you take a look at Tesla, Tesla's got a daily Rhodes Momentum Indicator bottom, a weekly TD9 count bottom, and a monthly chart that found support in its bullish structured profile out there. Price right now is trading with inside that new daily profile formed yesterday. Your resistance level, Tom, is at 294.86. That's the top of its profile. Also happens to be the swing point from back on the trading day of April 28th. And the volume there, 151 million shares. You're trading into it so far with 42 million shares. You're trading into that swing point with similar volume. It says it wants to at least get up and test that 294.86 level. Now, you may get up to really beyond that. The weekly chart says, I want to make a move to the oscillator and change line, and that's at the 298.55 level. If you close above 298.55, don't even consider thinking about shorting Tesla. Now, I'm not talking about those folks that are intraday. Tom usually writes in around 5 or 6 in the morning out there, and he could easily be out of the trade by the time I come back on the air out here. But with regard to Tesla, it's bullish daily. It's bullish weekly. It will get really bullish weekly if it can close above the 298.40-ish level out there. And that's what we see when we take a look at Tesla. So hope that helped you out, Tom, and best of luck to you on those trades. Hector writes in and would like to take a look at ticker symbol FLR. So let's pull that up on our screen out here. FLR is tackling its swing point that would generate an A to B equals CD pattern on the upside with a close today above 35.96. Now, Hector and Patty, this retracement, this B to C retracement out there is like 32 or 33%. So we're going to cut it some slack and say, okay, maybe it's an A to B equals CD pattern. Price is trading about 35.96 right now. The volume there was about 2.2 million shares, 2.3, call it 2.4 million shares on that trading day, April 23rd. Today so far, 2 hours of trading, 661. So you're passing that with much lighter volume, or what looks like at this stage of the game, much lighter volume. Doesn't matter. You close above that, you're still going to trigger that A to B equals CD pattern. Okay, so we've got that in place. Where's the next resistance level? It's coming from the weekly chart. It's got a TD9 count bottom. Price is trying to get back inside its profile. It accomplishes that task with a close above 35.84. Its next level of resistance is toward the 37.13 to 37.68 area. You close above that, and then FLR is going to get up towards 41.34. That's going to be basically right around the initial price objective of its daily A to B equals CD pattern to the upside. So that's what I see, Hector and Patty, when we take a look at ticker symbol FLR. As always, good to hear from you, and thanks so much for writing in. Nicholas, always good to hear from you as well, and wants to take a look at Mosaic. MOS is the ticker symbol out there, and this thing has been a rocket ship. It's been a rocket ship after it formed that daily TD9 count bottom pattern, and it negated a TD9 count pattern on the daily time frame. It did it in basically 2 sessions. Tells you about a strong upward momentum move. When we say strong upward momentum move, Nicholas, we're not just talking daily, we're talking weekly, we're talking monthly out there. Price traded above profile resistance and their oscillator and change lines for all time frames out there. Of course, you're looking for an entry point. Well, I don't see a top as we speak right now. You're bar number 6. I don't suggest you jump into the deep end of the pool and hold your nose. Instead, I'd wait for some type of retracement. You look at that daily time frame. You haven't seen a 2-bar retracement. If you do, that's probably a gift. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Hey, remember, we're taking a look at the ES Mini and the NQ, both in bar number 7 to the upside. If you take a look at the Spot VIX Index, we are in bar number 7 to the downside. So, we want to be patient. The last time we had a nice VIX bottom out here is with a TD9 count. That was one from March 25th and March the 26th out there. And, of course, in that stage market, VIX started moving higher and the S&P 500 started moving lower out there. So just bring that to your attention. Let's get back to our next request out here. Comes from White Shark inside the Tiger. Now let's take a look at PRQR. So as we take a look at PRQR, here's what we notice. If, in fact, today price closed above 172. 172 is the TD9 count top. You'll negate a TD9 count pattern immediately. And that tells you about a strong upward momentum move for that time frame. However, and that would be the signal. If you don't close above 172, the daily TD9 count top still remains in place out there and says you could pull back to test support. The first level of support would be $156. Now, even if you close above $172, and even though I said it looks like it would be a strong upward momentum move for that time frame, that is a true statement. When we look at the weekly time frame, what we see here is a sell zone, and that's been it's not saying that it can't get through it, but it is a sell zone. It's going to be choppy, or could or should be choppy. That's between $176 and $189. If you can clear that area, then you're headed back to the top of the consolidation, and we can take a look at PRQR. It's been consolidating sideways since March of 2022 out there. So basically somewhat dead money. Now, been a nice move if you caught the bottom at around 50 or 60 cents out there, rode it up to about $3.70. Right now, we're kind of in the middle of that, slightly in the middle, but closer to the bottom of that consolidation pattern out here. So watch the daily time frame. Watch that $1.72 area. We're trading at $1.72 right now. That'll give you clues. Then you got to watch 176 to 189. White Shark, that's what I see when we take a look at PRQR. Hope that helps you out. Dude's got a couple of requests. Let's get to the first one. DRS is the ticker symbol. And DRS, that is not it. Let's get to the actual correct set of charts out there. This will be correct. And now we take a look at DRS. DRS is a beautiful looking set of start charts here for the daily, the weekly, and the monthly. You are in full breakout bullish mode for all time frames. You're at new all-time highs out there. Now let's go find the bad news. That's kind of tough to find the bad news. You're in bar number 7 of a TD9 count. You could get a TD9 count pattern that forms between tomorrow and Tuesday. So kind of following along with the ES Mini, the S&P 500, and the NQ. There's an A to B equals CD pattern to the upside. Let's take a look at it. I'll just draw the A to B pattern, and then, or the A to B line, and move that to the C point out there. Let's check out the volume as this B point was being passed. The B point had volume of about just over 1 million shares. It was passed with 558. Was passed with 458, was passed with 478, kind of getting it out there. 630, yesterday was 991. 991, not too bad, but still short on volume. Today's volume, though, now you're at 713,000 shares. So there's your confirmed A to B equals CD pattern to the upside. Initial price target in the 42-ish level out there. Now that retracement, I don't even know if that's a 0.382 retracement, but we'll give you the benefit of the doubt out there. Not that it's needed, but I don't see any kind of a topping. But how about the weekly chart? The weekly chart, the swing point had volume of 2.5 million shares. Today, we're at 2.8. So you're going to get a weekly A to B equals CD pattern to the upside inside of DRS. Dude, hold on to that if you're in there. You may get a short-term pullback early next week as that TD9 count pattern unfolds out there, but boy, sure looks pretty darn tootin' good. Now let's go take a look at Chipotle, see what the charts for Chipotle are communicating to us. Also another request by Dude. We take a look at Chipotle. You just got a consolidation with inside the daily profile. And that daily profile, resistance up at 51.78, may be its price target. Support all the way down at 46.67. A nice Rhodes momentum indicator bottom on the daily time frame. frame, a nice TD9 count bottom on the weekly, and on the monthly time frame, its Rhodes Momentum Indicator top found support at the bottom of its profile, 46.53. In other words, all three time frames are telling us it has bottomed. In the case of the weekly time frame chart, if it's bottomed, we're going to see a close above. We're going to need to see a close above 52.33. If you do that on a weekly time frame, you'll generate a profile change in trend, and that'll suggest a move over time to the 59.09 level. But on a daily time frame, which of those two stock charts look better? It was at DRS, that's for sure, dude. But not that Chipotle looks bad. It's just dealing with that resistance level, key resistance up at the 52.33 level out there. Peak G wants to go nuclear out there, so let's go take a look at U. Let's keep adding the U's out there. Not that it's going to give us a different chart or anything. If we take a look at the quad U's, we're just consolidating inside its daily profile. Support down at the $3.94 level. Resistance up at 482, a likely price target. Daily time frame, not sure what top formed, if any, but price pulled back, tested, rejected that green oscillator and change line. And as long as price remains above that, that is a bullish signal. Let's look at the weekly time frame. Weekly time frame, TD9 count bottom, price consolidating with inside its profile. It did find resistance up towards the top. So what we're going to know here, Peak, is that with regard to its weekly chart's not going to go nuclear until you close over 516. And even then, you're only going to get up to the 577 level before you have your next resistance point. But clear 577, and then it is off to the moon. Of course, that moon would be, if you do that, if you close above 577, that would be really a really good outcome. But right now, you just got a consolidation inside that bullish structured weekly profile. Watch 425 to the downside. If you close below that, you're going to go target 394 to 415. The monthly time frame chart has this formed a buy the D point, a Gartley buy pattern? I don't know, but let's go find out. Let's actually hit the right button out there. 1, 2. Let's try this one. Buckle my shoe. Here's your A to B point. Let's just move this over to the next highest high that forms after that B point out there. That would be right here. And no, of course, we can't get exactly what we want out there. So it has not completed that A to B equals CD pattern to the downside. So the monthly chart is the only one that's a bit suspect here at this stage of the game. Really, that's about all that I've got for you on U. So nothing that looks like it wants to go nuclear there, but maybe the second one does. That would be NXE. So let's go take a look at the NXE charts. This is also for Peak G. And NXE right now is trading with inside its daily profile. It's taking on profile resistance. That's up at 537. Now, let's assume you could close above 537 today. The question is, do you go take out the high from a few days ago? If you do take out that high, just tick above it, 548, whether that's today, tomorrow, or Monday, that would trigger a TD9 count pattern. We're not there just yet. You do have resistance. TD9 count breakdown resistance at 564. Weekly time frame chart. Nice TD9 count bottom pattern there. TD9 count, by the way, on the daily time frame. And we like the monthly chart. So we like this chart better than your quad U's out there. And the reason is because we can see clear support on the monthly time frame, which was at 391. After forming that Rhodes Momentum Indicator top, price getting back eventually to its breakout level. So you got a bottom on the monthly, bottom on the weekly, a bottom on the daily out there. And I think that's music to Peak G's ears. The only thing I can't give them is the mere fact that we're getting ready to take off to the upside. But the boosters are lit. That's for sure. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the charts here for natural gas up. This for Joe, who writes in. His question is buy or sell on Boyle. Boyle is the 2X version of the UNG or of natural gas out there. So we're just going to really take a look at the natural gas contract, Joe. I hope that's okay with you. And if you're asking, is it a buy? Well, I have to disclose to you. I don't have to disclose, but I would, that subscribers now are long natural gas. So why are we long natural gas out here? Well, we're long natural gas because it formed a daily profile change in trend signal. It actually did this on the trading day here of April 29th. I think we jumped in a bit early, like on the day of April 28th out there. We've remained above the top of its profile. We've remained above its oscillator and change line. If I open up the June contract out here, another reason why we went ahead and took that long position is because price has not been above its oscillator and change line since March the 11th. Of course, it's been above for the last 4 days out there. What natural gas may do is go target the 426 level. That's its CD9 count breakdown resistance area. That's for its daily time frame. If I take a look at the weekly time frame, it looks like we may tomorrow get a Gartley buy pattern or buy the D point bottom. You have right now, you've got a bull sash candle that's in there. So it all depends upon tomorrow's close. But the weekly is giving you a buy signal as well. And on a monthly time frame, price is just simply trading with inside its profile. It's a new profile that's formed. $2.98 is support. $4.60 is resistance. And I think that's what price wants to do. Well, now, if we get the buy the D point pattern for the weekly time frame chart, that suggests rallying up towards 384. So that would be a price target to the upside. If we take a look at the monthly time frame chart, we closed lower for 4 consecutive months out there. So now we're in store for perhaps a 2-month move to the upside. But let's take a look at the seasonal pattern out here for natural gas. And we put the seasonal pattern out here, Joe. What we're going to see is that natural gas is in a favorable seasonal cycle out here. This is the 34-year seasonal pattern. It suggests that price will rally into the middle of June out there. So it says, that's what I see when I take a look at natural gas. Now, look, that's the last 34 years. We can change that. We can look at the last quarter of a century. Basically the same thing, telling you through about June 15th. Let's look at the last 15 years out there. Basically the same, although not as much of a rally, but June, well, actually in this case here, over the last quite frankly, over the last 15 years, we're in rally mode right now with price not topping out to September 13th. Look, we're going to take things one step at a time. We utilize these seasonal charts for the most part to understand the just to understand where we're at with regard to that analog, so to speak, out there. So the answer is, you say buy or sell. I don't have it as a sell. I've got it as a buy, and with conviction behind that. So hope that helps you out, Joe. As always, thanks so much for your request. Nicholas writes in, has a couple of requests out there. Let's get to them. First one is MGM. That's not it. That's GM. I got the GM portion of it, but he would prefer to take a look at MGM. So we're going to get that done. Here we go. MGM having a terrible day out there, finding resistance right at the top of its profile this morning, which is at 32.72. Now, where's it going to find support? Well, it could be at the bottom of its profile at about $30.10 out there. So that's your key level to be watching. I don't have any kind of a, maybe it did complete. Let me see here. I'm looking at the potential Gartley sell pattern that would have formed out here, or could have formed out here. So let's draw on the A to B point. Let's just move this over to that C point area. See if this actually did complete. Come on, grab it. Say what? It's going to be easier for Stevie, some reason, to copy and paste, I think. Let's see if it is. Oh, this little bugger. Oh, that's unbelievable. There we go. Okay. Okay, I'm glad that I did that. So you're getting a Gartley sell pattern signal right now today, Nicholas, and MGM. It's a bearish engulfing candle. I don't know what it's going to look like at 4 p.m., but 11:46 a.m., bearish engulfing candle. That says $30.10 is really going to be a key level. The reason is if price closes below that, you'll have lost daily support, and you could get back down to its swing point low from back in April. Now, when we look at the weekly time frame chart, it says you need to close below 29.94. And at 29.94, it actually gets you into a buy zone. So the buy zone, so even if you close below 30.10 and you get towards 29.94, it's going to be pretty turbulent down there because you got buyers between 27.62 and 29.94. And you've got a nice TD9 count bottom that completed yesterday for the monthly time frame. So, but right now that's trading below profile support at its oscillator and change line. So you got to go with the daily first. That's where you're going to keep your eyes, Nicholas, that daily time frame for MGM and that 30.10 level out there. Let's go take a look at the charts here for Baidu. I don't think I got them in. So let's go put this in right now. In fact, I know I didn't. So let's go put those in right here. We'll stick with this same set of charts. This gives us our cadence, our number of consecutive higher and lower closes at the bottom, both for daily and weekly. We're going to do that when we go take a look at gold. For, I think it was LB that wrote in. So we take a look at Baidu out here. Baidu looks pretty good. You are trading, let me just make sure out here. Give me another second. Here we go. Stevie with the nice TD9 count bottom pattern. But did this form a sell the D point pattern? Again, I'm going to try to grab that little bugger. There we go. We did not. Okay, so we never made it to the one-to-one price objective. So we've got price pulling back right now. Maybe it pulls back to 86.64-ish. That's its daily oscillator and change line. The weekly time frame, we closed above last week. Profile support, we're testing that right now. Profile support being 88.19. We're at 88.20. A second close above 88.19. You've got a profile change in trend. That would suggest that Baidu wants to head higher out there. Monthly time frame, it's just a consolidation with inside the daily profile. The range is between 111.82 at resistance out there. So Baidu uncertain of, but I don't see a topping pattern per se out here. But you want to see this thing close that week above the top of that weekly profile. And again, that number was 88.19. You close above 88.19, then that is a beautiful thing. So now we want to go ahead and put up gold here, but we're going to put up gold on the continuous contract to, so what I'm going to say is ignore the profile levels that show up. Sometimes they're right, sometimes they're not. I'm saying ignore them, even if they show up. Well, they're going to show up here. Now the daily one, 33.25. That one is correct. And so we get it closed below 33.25. Lee's question is, do we see gold basing here for a few months? And do I have a price target, basically? Well, let's take a look at different price targets based upon different sets of conditions. First thing that we're watching here is going to be that daily time frame chart. Do we close below 32.25.10? If we do, let's open up the daily. Nah, I don't want to do that. It's just because I can't rely upon the profiles on the continuous contract out on with the monthly chart. What the heck happened there? That's weird. That's really weird. Sorry about that, folks. I don't know what Stevie did here chart-wise, but that really screwed things up. But and I hate to really screw things up, but I'm pretty good at it. So you'd be amazed. So let's take a look at this. So that's a daily time frame chart. Now, if price closes below that lead, then the next level of support would be the weekly oscillator and change line, and that's at 31.71. You can see that that's the continuous contract is not the same as the. But I'm using this for a price target. So 31.75 would be a price target. Below that, it would be 29.45. The most important thing that I wanted to show you is we've had 4 consecutive months to the upside. That was yesterday. We are likely going to get a 2-month pullback. Where's that going to take us to? Don't know just yet. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. I did put the June contract for gold up for the daily, weekly, monthly time frame. It does have enough data to provide us with a good assessment of exactly what's going on. So you got a daily Rhodes Momentum Indicator top. Was that Three River Evening Star that formed that pattern? Price right now is testing that key level of support. The bottom is profile, 32.25.10. If price closes below that, we likely get back to 31.89. and change out there. That's its weekly oscillator and change line. We're going to go ahead and tomorrow confirm a TD9 count top on the weekly time frame chart to go with the daily Rhodes Momentum Indicator top to go with the completed TD9 count top on the monthly time frame for gold. You kind of get the picture out here. We got a top on the daily, weekly, and monthly time frame. I can't scream loud enough. I could, but I won't. Be careful out here. Why be careful? Well, now we take a look again at that bottom panel of that chart. So consecutive moves higher and lower. Yesterday, we finished a 4-month move higher. Last time we did that was October of 2024, and that led to a 2-month pullback. Lee, I don't know to what area that is. We take things one step at a time. If 3189 were to fail out there, we'd be looking at the monthly oscillator and change line. That's at 2985. There may be new profiles that form. There may be A to B equals CD down patterns, all kinds of stuff out there. But this chart here says be careful. And I mean, be careful out there. Let's take a look at the last request coming in from Dude. Wants to look at HCSG. This is a rocket ship. Bar number 7 to the upside. I mean, this thing is it's traded above all resistance out here, daily, weekly, and monthly out there. Likely to rally further. Your question is, where's an entry point? Well, we're up for 2, 3, 4, 5, 6, 7. Today's going to be 8 days to the upside, bar number 7. Maybe this forms a TD9 count top between tomorrow and Tuesday of next week, and then wait for that retracement. Maybe you get back towards a 1255 level out there. Folks, stay tuned, if you would, for all the great programming here. Thanks so much for joining me on Terrific Tuesday, on May Day out there. Be safe in your trading. I see that NQ did hold that 035.25 level, so that TD9 count pattern is still in effect out there for that time frame. Take care, folks. We'll see you tomorrow.